Literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks. I'm saving up my dough, watching it grow. No more wasting money on things I don't really know. Financial smarts, that's my new swag. Investing wisely, no more burning cash, I'm building wealth. $1 at a time, going from broke to living the life that's prime.
What's good, everybody? It's your boy Reckless Ray Dinero, and we are back with another episode of Future Financial Strategies, but not just any old episode. This is the episode, the first episode for the month of June. We have crossed into summer. The sun's out, guns out. It's go time, baby. First episode of the month, you already know what it is. It is the financial recap for the month of May. And we've got some great metrics to share with you guys. Actually, they're all good, but some could be perceived as bad. Let's first and foremost, let's talk about the sponsors of the show. Shout out to Delta Investment Tracker app. Now, if you are looking to deep dive into your portfolio to gain additional insights and metrics and strategy ideals and be up abreast at the latest in the crypto and traditional financial spaces, you can do all of that within the Delta Financial Tracker app. We salute them. I got a link down in the description. I don't get anything for that one, except for letting them know that you found out about them via me. They sponsor me via allowing me premium features for free. I love them for it. Definitely getting the value. Definitely want to return the value because we like to over-deliver on what's given to us over here in the Wolfpack. Secondly, we've got a new app that I've added called it's a tongue twister. That's the reason it's such a pain. It's a little bit of a tongue twister. It's called little bit of a tongue twister, super useful. Let's see here. It is called Exio. Jesus. It's good. Exio app. And what we do there, now, I've previously been using Empower, which was previously Personal Capital, but it's a little bit buggy, very glitchy, kind of don't like it. It's just something that I do. There was a lot more manual entries being done with said app. And the reason we switched over to Exio is because, well, first of all, it's paid. So like we wanted to do a big kid app, and we're going to give this one a try for a year. It was between this and Copilot, and this one apparently will track your dividend income as well. And since we are well down the dividend rabbit hole in the portfolio, we are going to be very much leaning into that to see how this works out. There's a couple of quirky things about it that I kind of found interesting. So far, so good, though. We're currently in the process of migrating over on that. And then after we get everything migrated over, we'll do a deep dive on the app and the experience. But if you tap in down in the comments, this referral actually gives you 1 month of premium access for free, which means you can link as many accounts as you want. This is a good one for automating. You can also link your crypto accounts should you choose to. Me personally, I'm a manual entry person when it comes to the crypto space stuff. But it does allow you to link wallets, brokerages, exchanges, all of everywhere that you could put your crypto. It does give you the ability to link that in there as well to give you a global view of your net worth. I'm more or less kind of a bare bricks when it comes to the global view. Like, I don't really need budgeting help. It's not necessarily hard for me to just not spend money when I don't need to spend money. I'm very focused in paying stuff down, obviously. We've got some stuff in the works that we're getting ready to work on to play with a little bit of debt that we have to see how some of these other future financial strategy tools that we want to add to the tool belt work. More to come on that. And yeah, we're gonna be dialing back in on these things. But the Exio app, I definitely like it so far. Like I started setting it up today after I got finished with my end of month financials, because I was like, it's just becoming such an annoying process to have to deal with a buggy app for tracking your net worth. And I want as much streamlining as possible in that, because it helps speed it up. I do enjoy the process of going through, looking at my net worth, breaking out what we've done. I enjoy pulling out the metrics on what we saved. I still use my spreadsheet, but I do like the app in the sense that it gives you that global view. So at a glance, I can just look over, see what's going on, and keep it pushing. And I do like having that global view after I get done with the spreadsheet, because like that's where I get my end of month net worth to see how much we've either grown or shrunk. And if the money and capital is flowing in the right place, it allows me to track my savings. Honestly, it would be nice to have an app that did all of these things for you. That might be a good project. That could be interesting. But yeah, so we're going to go ahead and jump into the metrics because we got some different breakdowns. So first and foremost, the one that's important to everybody, as I am one of the only people in the finance space, I think, who doesn't make six figures on YouTube, that's saying I make six figures on YouTube, because I don't, and still somehow was able to procure a home, a car that's paid for, and, manageable amounts of debt with no college degree. I'm just a big financial idiot out here in these YouTube streets. If you guys haven't noticed, it's just for some odd reason, when you just function based on the bare bricks of math and test and stuff, things kind of tend to kind of pan out. But we'll jump into the first one. So the fluctuation between last month and this month in regards to growth of the net worth. We are up $27,974.67. Obviously, mostly being in crypto. Crypto market moved a little bit back up. It was a rough month. With the savings, savings rate. So let's talk about the net worth for real quick. We're going to do a little breakdown on all of these. So the net worth increasing $27,974.67. Within the crypto space, as crypto fluctuates and as you're continuing to add into the spaces, obviously we're doing a Herculean effort to build out some income in the brokerage account so that we don't have to touch the crypto and we can let the crypto continue to grow and flourish and just build unencumbered over there without having to pull out of the market to live on. It's been really good. So obviously we're going into the bull run. So technically speaking, we should be stair stepping up. Last month or month before last, April was a harsh month. We had a retracement. We had some approvals. We had a little bit of a pump. Then we it's nothing goes up in a straight line, but it looks like now we're starting to sideways edge our way up, which very good, very good. But volatility, when your net worth is tied up in something very volatile, it's something that not everybody's built for. It does fluctuate month to month. It's just the reality. If you have a bad month in crypto right now, because all of my things are tied to my crypto thesis for the next 14 to 18, 20 months, it's across the board. So if crypto has a bad day, my brokerage account, by and large, has a bad day. Everything has a bad day right now. Now, after we get these initial 3 positions solidified in the brokerage account, we'll start diversifying out to some other stuff to where maybe the numbers will be a little bit different. But until then, it's what it is. Red day across the board. But we're moving back up a little bit, even with the volatility that we're having. The portfolio is generating some income. The income that we're looking to generate next month is going to be super. I mean, I'm getting excited. I'm getting really excited about some of these metrics. Pull this up because there's a couple of numbers off here that are extra that I like to talk about. So when we talk about the income generated, it's going to be the next one. The DeFi income that we generated was $662. It's not bad. A little bit more than the previous month. Great. Dividend income that we generated in our portfolio was $382. Now, we made some investments that had already paid. I'm learning this as I go for the brokerage account, because I'm avidly haven't touched it in a decade until now. But a lot of our investments went into stuff that had previously paid dividends. We also did some reallocations, which we'll be going over in which will have gone over in portfolio updates, because that actually will be releasing before this one, because the first Monday of the month is going to be before the first Thursday of the month, which is when you will see this. But we had some reallocations happen. The dividends came in a little bit lighter, but that's because those are actively managed portfolios. They are making money out of the market, and that means that your gains and what you get aren't consistent. That said, I'm not complaining. Next month, the projections are looking pretty good. We've consolidated down into 3 focused positions. The portfolio is very focused, very narrative aligned for those first 3 positions. I have picked those first 3 positions. The 3 positions are set. We're doing what it do with those 3 positions. I'm excited about it. I'm looking forward to what we've got going on there. And yeah, we're humming right on along. The dividends were almost a little over half of what we did in the DeFi space, which the DeFi space doing what DeFi does. We're also making some adjustments over there. And it was nice to see that some of these positions that I'm looking at getting into are doing what they need to do. So DeFi kind of stepped back up because I was kind of concerned. I was like, if I can make as much in my brokerage account as I can in DeFi, I'm like kind of worried, kind of a little bit worrisome, because it's like, I might just come back over here with that money. But you got to look at the growth as well, which my dividend portfolio, there's not going to see near even touch the growth of what the crypto portfolio is going to do. So we're good there. The next piece of information, next thing that we're going to jump into, is the savings rate. Actually, I'm going to flip these last 2 as well, because savings rate could roll into that. So the savings rate percentage, it's one of the things that I check every month now to make sure that I'm hitting the metrics of what I need. And the way that I do it, since it's very counterintuitive, since we're using all the tools, we are using debt tools, we're doing all sorts of stuff, we're leveraging long on our future. The number changes every month, but like I'm trying to get into a happy medium of at least 50%. That's what I'm shooting for. It's 50% of all the income that comes in, that counts as your W-2 income. Any money that's coming into old Ray Bear's place, we're trying to invest 50% of it. And I say invest because I don't believe in traditional saving. I don't like it. I'm not a fan of it. And I think if you're sitting on cash right now, you're insane and or just not very financially literate or understanding what's going on. So we're trying to get everything into the market in some form or fashion. With that said, I am also I mean, for me, it's like, I'm like at 50%, I'm trying to not have to work until I'm like 75 or however old. I don't even want to work till I'm 60. I don't want to work till I'm 50. Like that. So we're trying to do everything that we can to kind of make these situations work out to our benefit. And obviously starting late, you just want to be as diligent about that as possible. And I say late in the sense of being somebody who's crossed over into 40. I'm 40 this year. You start looking at your timelines and horizons. Now, we've secured the bag with crypto. That's just a matter of waiting. So I'm pretty sure that I would be able to retire early off crypto alone. But then at that same point, it's like, okay, so like at that juncture, it's like, okay, so how much earlier can we look at here? Like if we make a Herculean effort and like put the brokerage account in place to allow crypto to do what it does and like maybe get to a position to where we can subsist off of our dividend income. Granted, it fluctuates, but generally speaking, so does my spending. So like if I know that I just don't have a whole lot of money coming in, all you got to worry about is managing what you've got going, then you just do that. And vice versa, if you got like a windfall, then like, stocking a little bit away, a little bit extra reinvestment, we're going to do that, which is one of the reasons that we're getting to a point to where we're working towards getting to a point to where we are completely credit card debt free. And I say credit card debt free in the sense of I will still pay for things on cards. I will still be gaming the point system, but I want all the revolving debt down to zero. And the reason we're doing that early is because now that I've gotten the indicator that like, yes, we are in a range of being able to retire early, just based off the crypto portfolio. I'm like, okay, well, I want to do everything that I can to like not touch that now. Like I got to step the game up. And it's like, okay, well, how much earlier could we do that? Can we go ahead and just replace some income stream or get some supplemental income stream to buy more time? So the game's changed a little bit, but we're still using all the tools. We're still not, at this juncture, I don't know that I'll ever even need to make six figures, to be honest, because if I don't have to go to work and I don't have to do anything I don't want to do and all my stuff's paid for, then like it doesn't matter what income you have. It's like you have to leave your house or go do something, and I technically don't. So we'll be down to a position to where we can do basically the bare minimum to get insurance, and then I can work on stuff that actually matters to me, because I'm not going to not work. Like, it's just not happening. I just don't want to have to work, and I don't want to have to be stressed about things that I'm not in control over. It's about getting control, buying your control back. So with that said, this month's savings rate was 213.73%, which means that I saved more than I made this month by a long shot, which is awesome. What do? It's because we leveraged our debt tool. We brought more debt into the system. We've converted that debt into assets directly. And obviously on the months that you have that cash infusion, you're going to have an over accentuated savings percentage rate because I invested more than what I made, including the investments off of my chunk of investments off what I made, which is awesome. So there's that. The savings amount total we saved this month was $8,745.78. How do we do that? Obviously the debt tool, but like also had a surgery, had some medical expenses, and we cashed out the HSA. I understand a lot of people be like, oh, be like, well, if you're planning on having money before you need to retire, I don't want to wait till I'm 65. While I do love high deductible, I love HSAs. I use it. I want to get to the point where it's invested, but like, hey, if it comes to using that, I will use that. And the reason being is when I reimburse myself, I went ahead and took that payout and invested it. I'm going to pay back cash that's cheap, and I took the payout money and invested it, so that money is actually still working specifically for me. And yeah, so like when you actually utilize your HSA, it's pre-tax money, and then as you utilize it, it becomes post-tax money, and you can use that for investments. I don't use it to reimburse. I reimburse everything out of income. We generate income for that, and we pay back with those dollars because those dollars are cheaper. So yeah, we saved on paper. We saved a lot of money. We added debt, but we saved a good grip, especially when you're adding debt to purchase assets. So specifically for us, we purchase cash flow. That's what we're buying right now. We're all in on cash flow. We are purchasing cash flow, gobbling it up as fast as we can, using the said cash flow to repay the debts, and then we're going to rinse and repeat, and we're going to run the wheels off of this. Because I think if I run the exact play that I'm running now, if this works the way that I think it does for the next 5 years, I think I can technically, as far as me having to go to work, will be done in 5 years. It'll be about going and getting benefits at that point. I'll need insurance. But I think if I run this play exactly as I'm doing it right now, like once it gets to steamrolling, because it's getting ready to start doing that. Because I was looking at some stuff, rearranging some stuff. We're going to have the video on it. And throughout the month of June, we'll be documenting some stuff. We are looking at a 5 years, head down for 5 years, and I'm going to be able to start doing some what I wants versus what I have to's, and it's gonna put us into a different space. I mean, this crypto bull run going to put us into a different space, but I think the stuff that I'm doing in front of that to keep from having to touch the crypto is also going to supercharge that as well. So we're looking at that. Now, the contentious part is the credit score. Credit score dropped 78 points. We're down to 730. It's the first time I've been under 750 in a long time, and it was kind of the perfect storm. We utilized the debt tool. We had a bunch of front-running expenses with medical bills and whatnot, plus the float I already had, which just added up, boosted my credit utilization up. If you use the score, it changes. It's down 78 points. We're sitting around 730. Still better than most of y'all, but I actually use my credit. So the number's not supposed to stay 800 plus all the time. And yeah, so we had that going on, and we're fine about it. We're going to machine gun right back through it. It's going to be what it is. And I'm not super concerned about the credit score dropping. Like, I knew I was going to be taking a hit to begin with. It was just the hits kind of turn into a bunch of body punches. But we're gonna get there. I mean, 2,900 of it's getting ready to get. I mean, I'm getting a $2,900 refund because I paid up my surgery up front. But as we're going through this, it's kind of like one of those perfect storms, because life actually does happen, and it actually does happen to all of us. Like, I did not know that I was going to have a major surgery this year. I normally don't go to the doctor, and then, 1 year major surgery, you're utilizing your debt tool. The thing that I didn't do was I did not let that surgery scare me out of following my process. So I was like, cool, we're just going to take on a little bit extra burden, and then you figure it out. That's me personally. I'm very financially disciplined, and I was like, I can just not buy stuff. So catching those body punches actually put in a position where I can utilize some of these tools to actually show you, again, with my money. I'm not telling you what to do. I'm showing you what I'm doing. And this is going to allow us to do a really good case study and experiment on, hey, if this, and this happens, because that's one of the things that they always put up as a cautionary tale. Don't use debt, because what if you harm yourself and you can't go to work, or you're down for a little bit? Well, I was down for a little bit, and I could not go to work for a few weeks, and had to have a surgery, and then had to go through that process. And then still during that time period, I was like, I'm utilizing my debt tool to buy income. And it shifted my perspective and made me really sit down and think about how I was moving forward. And I was like, I'm going to do the income play, because worst case scenario, the assets that I have, that I currently own, minus my house, because I don't count my house, because I would have to move out of my house and then I would still have to pay for stuff. So minus my house, I had other front running assets that I could dip into to substantiate that. So then taking the debt and buying more income and going, hey, this income in and of itself could pay this back more or less, so that I don't have to get rid of the asset. But like, if I need to, the asset is there as a vehicle of last resort. I could clear all my debt right now if I started cashing out assets, and I would still have assets left. So that's kind of where I'm at with things. But I want to test these tools. I'm like, I'll pay a little bit extra money. I'll pay some interest to show you guys through my personal experience that these things work. These tools can work if utilized properly, because everybody wants to punch holes in everything and tell you what won't work, and tell you that you need them to be your financial advisor so they can tell you to do some basic stuff so that you can get rich at a slower clip and pay them. And I'm just going to show you the things that work over here. So my credit's down 78 points. It'll be going up 78 points or more throughout this process. Actually, it'll be more, because now that we're focusing in on the credit card debt, like our revolving debt is going to be utilizing the debt tools specifically to acquire assets. So that's going to be an interesting change in how things function. But I think I've got a pretty good system set up that'll supercharge this, and I'm excited to document that part of the journey. I'm excited for this journey. Like, the more that I look at it, like every time I go in there and mess around with stuff and start thinking and doing the math in my head, I'm like, yes, this is gonna be cool. So we'll be tapping in with that. Now, before we end the show, I want to give you guys a little bit of additional added value. And how are we going to do that? I've got 3 things that everybody should be abreast of that are in the Wolf Pack, they're on the journey of financial literacy, should be aware of going into the month of June. So the first thing we're going to talk about is preparing for potential rate changes. The Federal Reserve's actions on interest rates will continue to impact mortgage rates and overall housing markets until in June of 2024. While some experts are predicting that rates may range between 6 and 7% by spring, the 30-year fixed mortgage rate is still averaging above 7% in early May. Potential home buyers and those looking to refinance should monitor interest rates closely. Now, for me, I'm not in a position where I can refinance. Like, my rate is great, and we're going to be using one of the strategies most likely to kind of attack that, because like I'm still trying to decide if I even want to really attack my mortgage that heftily. I mean, after the debt's cleared, I'm probably going to up the amount every month that I'm putting towards the principal payment a little bit, because there's just like I'll have a lot more cash flow, because once the debt's cleared, it's just cash flow at that point. And we're trying to get to that point. It's just going to be cash flow in, and then we'll be utilizing debt tools to make assets grow. As far as my home goes, though, I guess we could get down to a point to where we could utilize the equity in the house as one of the debt tools. Like, that could be a potential thing. And we could look at that. We could actually, that might be the play. Yeah, I think we might do that. I think we might do that. I like that. I like that idea. But with that said, that's going to be something that we're going to have to look at, because I don't even know. We're building the ship as we're going. But what I do know is refinancing for me would only cost me more money. So, and it would reduce cash flow. So we're not doing that. That's not even an option for me. But for those of you who are looking to get into the market, the one thing that I can say, and the one thing that I've been saying since I personally bought a home, was the best decision that I made was just getting in the market, to be honest. Doing the math, because I did do the math, and it was going to cost me, and I've done videos on this, it was going to cost me $50 more than what my rent payment was, but my overall expenses went down $400. So my existence, because you get some perks that they don't tell you about for home ownership. There's some benefits in there, just in what stuff costs, because you have to have insurance on your car. You have to have insurance on a bunch of stuff. I saved $350 a month owning a home. Or it was $400 total, but since the mortgage was $50 more than my rent at the time, I did that. And then, the rest is history. But that was my also, the security and knowing what your payment's going to be. Everybody else is paying hundreds of dollars a year more, thousands of dollars a year more, whatever, however they're jacking your rates up. I think my rates have gone up maybe $100 in 5 years, and that's because of taxes. I've had tax increases and property value assessment increases, and it's maybe $150 spread over 5 years. And we'll say worst case scenario, it's $150 more than what I originally bought this at. Maybe. And that's a worst case scenario. So that's what, divide that by 5, $30 increase a year on average over the window of time from when I bought this home to now. And it doesn't go up every year guaranteed. So something else to think about. Number 2, rebuilding emergency funds. After the economic disruptions of recent years, it is crucial to rebuild or contribute to an emergency fund with 3 to 6 months worth of expenses. Having a financial safety net can help weather unexpected costs without derailing long-term plans. Set up an automatic transfer to build the funds gradually. Again, I don't believe in holding cash, but I do believe in emergency funds. What I do is I separate out my brokerage account. So my brokerage accounts for these said things. Specifically, I guess my emergency funds will be living, because right now we're getting that core income you can live out of this account. And the monthly target of income that we're shooting for also includes an investment allocation similar to what I'm doing now. So like exactly what I'm doing now, I'm just snapshotting my existence right now and going, I would like to have that, but I'd like to have those funds coming into me, sitting at home and just being able to exist at home. That's my goal. Now, once we reach that goal, once we clear the debt, another thing that we'll be doing is building out a dedicated fund specifically for investment, for what I would call an emergency fund, which is this fund gets liquidated before everything else. How we're going to set that up is I will be doing a separate brokerage away from my current brokerage. And that account will have my deductibles, my high deductible. It'll have the full cash amount of that. So that way we don't have to touch the HSA next time. And it's going to also have my full, and I'm probably going to give myself 3 months. But the way that it's going to set up is it's going to be an income generating machine. It's going to be paying me, and then that'll just continue to fill that account. And then hopefully you just don't have to touch it. And it'll have all deductibles in there and 3 months of expenses. And that's going to be the target for that specific account. And what it's going to be set up to do is just fill itself with money, and hopefully you don't have to touch it. But when you do have to dip into there, we take it out, factor it as a loan. Oh, geez. We'll be doing that at a certain point too. You factor it as a loan, pay it back, but the account continues to fill itself. I like this. See there? That's the reason we make these videos, because it forces you to think. It forces you to think through your process and your strategy, and we just grew. That just leveled me up because we got some stuff that we're going to have going. I like this. Okay. Revisiting investment strategies, which is what I just did mentally while I'm shooting this video. With the increased interest in alternative investments like meme stocks, cryptocurrencies, it's important to reevaluate the investment strategies periodically. For long-term goals like retirement, sticking to tried and true approaches like consistent savings and diversification of portfolios may be more prudent than chasing quick gains from riskier bets. By being aware of these key financial considerations, you're better positioning yourself to make more informed decisions and get better outcomes. Now, the one thing that I will say about number 3 is I believe in focus. I do. My dividend portfolio, I am constantly focused in there. There has been some pretty interesting retoolings of what we've got in there. But the one thing that I will say, the one thing that I will lean into is now we've got it focused. I know those 3 core positions now. It's game on. Like there's nothing that's going to be standing in the way of what I'm working on at this juncture, because I've got those 3 core positions. And so the next position that I add to it is going to be a singular position. And it's like, we're going to flow into that. But we've got 2 other positions that we've got to build up to the allocation amount set. And that's $10,000. So those 3 positions are going to make $30,000 nugget. That's going to fund everything else over the next 14 to 12 months. And we might have to reallocate what the primary position is, depending on what happens after the bull run, but because it's very crypto focused. And does it need to be very crypto focused the whole time? No, but the first position of YBTC, that one's going to stay. Now, how we reallocate the rest of those positions out as we're going through this bull run, because I think that there's going to be a growth potential, definitely for YBTC as Bitcoin goes up, and the other positions as Bitcoin goes up, because they're all crypto influenced. But as we have those positions going, we're gonna be funding other positions to kind of temper out the volatility. So it's more about, for me, it's focus. Like the income portfolio, it's about income. I'm not putting in growth stocks that happen to pay a dividend and thinking I'm doing something. I am not doing anything but tooling this based upon my narrative for the next, again, 14 to 20 months, and really dialing in and focusing in on having that match what I'm doing in the other space that I know is giving me great results. It's about results. It's about the income. It's not about going, oh, my stock portfolio, the price of the stock. I don't care about the price. I'm buying money. I'm buying income. I have a long-term portfolio for long-term holdings. Like that's what that portfolio is for. If you're talking income, it should be about income and what you're generating. And there's no reason that, in my opinion, it just logically doesn't make sense that people who consider themselves dividend gurus have 6-figure portfolios that make half or less of what my portfolio generates. If you're into income, because if I had 6 figures in this portfolio right now, I would be at home, most likely, just figuring out what I actually wanted to do. Like I would definitely be in a different space. And when this portfolio grows itself to 6 figures, I will be in a different space. Now, I actively manage it. I am actively distributing those dividends, especially right now as we're attacking this debt. But like I said, supercharge your time. It's gonna be interesting. I'm excited about it. With that said, it's your boy Reckless Ray De Niro. If you like the content, definitely tap in with me down in the comments. I've had my reply gang is getting stronger by the day. I love interacting with them and answering questions and talking to people and answering questions, talking to people, interacting with you guys. Ooh, I had a phone call come in. And just touching base and doing those things, because it adds to the community effect. Obviously, I do get to answer questions. If I'm not in the chat on the lives and you guys have questions during the premieres, ask the question in the comments, because normally I do check, because like I get a notification when people comment on my stuff, and I do answer those comments. I answer every single comment right now, because we're a small community and there's literally no excuse. I don't understand how people have small channels like this one, because it's not hard to manage this many people, and they don't answer their comments. Like they don't interact with people. It's weird to me. It's so weird. I do interact. Share the video. Definitely share this content with somebody that you think would find value. There's always more room in the wolf pack. I know it's a small channel right now, but that's because we're going to grow it the right way. We're going to grow it telling the truth. We're going to grow it based on solid principles. And I know that's not as salacious as some of the other channels, but I don't need to live here. Like we're actively trying to make something so that you don't have to placate and you get to choose to exist in the fashion that you get to choose. So I'm giving everybody the tools, whether I agree with you or I don't agree with you. Like I don't limit my content. It's for everybody. Like I don't have to necessarily agree, but like I want you to be able to compete with me. And I want you to know exactly what tools I'm using so that we can compete on equal standing. So that way, when we have the conversation, we can actually have the conversation. And there's nothing that you don't know about that I got that I can be like, oh, gotcha, I'm doing this. I throw the tools out there. Let's do it. Let's start having debates over assets. Let's start having debates over strategy. Let's talk about that. Till next time, it's your boy Reckless Ray Dinero, and I am out. Peace.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play it, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.